you can keep allowing the rupee to depreciate, Pranjal, but you'll also come under fire from the opposition, which thinks the government has done a terrible job of trying to protect and defend the rupee. It's linked to the age of our politicians, and it becomes very complicated politically. Political fireworks aside, your broad sense of how the rupee is faring relative to the dollar in a global context, and what could happen from here?
Actually, the rupee has been a relative outperformer. The dollar has strengthened 18% since the start of the year. The rupee has weakened only 11%. And regional currencies have weakened about 14.5% to 15%. So the rupee has actually done relatively well. You know, I agree with Neelkant when he says that letting the rupee weaken right now is probably the best thing we can do. You know, the big problem we have right now is a trade deficit which is very high. What's really driving that is the fact that India's growth is stronger than world growth. We are buying from the world far more than we are selling to the world. Imports are outpacing exports, and we are seeing, you know, a large trade deficit.
So just pause that for a second. I'll call the trade data set on the screen, and then you can explain what you're saying and why, and then we'll build on that. So can we have the graph on trade, which shows how the gap between imports and exports is actually increasing, and that's the deficit that Neelkant was speaking about. But go on.
Exactly. As you can see, in the last sort of two readings, exports have actually fallen and imports continue to rise. And that is what is creating this trade deficit, which is weakening the rupee. So what do you do when you have such a big trade deficit? I think the best thing you can do is follow a two-pronged strategy. Number one, increase interest rates. So people stop buying too much, they stop importing too much, and also let the rupee depreciate so your exports become competitive in the global market. Thankfully, the RBI has started to do this now. You know, until August, it was only raising rates, but it was not letting the rupee depreciate. Rupee was stuck at 80. It's only since September, it's doing both. It's letting the rupee depreciate, and it's also raising interest rates. And I'm happy to say that finally we are giving the right sort of policy response to this problem, and I think we are on track to, you know, solve our external imbalances over time.
Ajit Ranade, the growth in exports is touted as one of the Modi government's big achievements. Piyush Goyal will be at the India Today Conclave in the evening, and they're talking about how Indian exports have started to bounce back and do much better than they have in terms of growth for a very long time. But the fact also is that the gap between imports and exports, that bridge which you can see, the blue marking there, continues to grow. What's your forecast on how the export curve moves from here, and what can we do to try and reduce imports?
Indeed, last year, India's export performance was really spectacular. I think we clocked something like $430 or $440 billion. This year, I think we are on track to probably reach $400 billion. But I must point out, Rahul, that when you showed the currency depreciation, you know, India is down 11% and everybody else, you know, 14% China. But everyone else is a net exporter. India is the only trade deficit country. So we must worry much more about the currency, and we must worry about the fact that our trade deficit this year, the current account deficit, is going to be alarmingly high, possibly 3%. And we should ask ourselves, why are we importing 1,000 tons of gold? You're spending precious $50 or $60 billion just importing gold, despite an import duty of 15% or something like that.
So what would you suggest?
So, you know,
be careful. You have to go back home and you got family and friends.
No, this is, by the way, the tiny part of it goes to the jewelry, but basically, I believe Indians import gold, apart from their, you know, love of the yellow metal, is because it's a proxy for owning foreign assets. Since we don't have capital account convertibility, you're not allowed to own foreign assets. A proxy for that is to own gold. But I think gold is a very big drain on our, you know, foreign exchange, especially on a year when we are worried about the trade deficit. And the other bright side is that on the IT and software exports, we are going to clock something like $250 billion of services export. And the PLI scheme is targeting something like 45% or 50% of output is committed to export. So that's the bright side on the next few years. But we must worry about very large gold imports and this widening trade deficit.
Abhik, let me use your insights to get you to suggest a question that I should be asking Piyush Goyal this evening. Here are the rate of growth of exports and imports. The rate of growth of exports is in the blue line. The rate of growth of imports is the dark red. Imports growing at a faster clip than exports. What, according to you, should the government be doing at this moment to try and ensure that exports are growing faster than imports?
Well, there's a limit to which you can actually expand exports. Making your currency competitive is one of the solutions. But let's not forget that there is a very fine line between depreciation being a competitiveness enhancing factor and being seen as a sign of our weakness on external balances. Global demand is weak. So I think we have set in motion some structural measures. The PLI, for instance, there is a large opportunity because of what is happening in China. These will play out in the long term. I'm afraid I cannot be very sort of bullish on export prospects going forward, given that the whole world is turning down. So what we need to do when we have a current account problem is focus on imports and the bits of imports that we can curtail. And I might sound terribly regressive on this, but perhaps we need to have a little more protection, increase import tariffs on certain things, put some kind of a ban on certain exports like gold. And I think we are not going to sort of get too much of a rise in exports. We have an external imbalance problem. We have to focus largely on looking at the import piece, which is also related to things like imported inflation.